Hello, everyone, and welcome to our second episode of Riskfluential, the show where we unpack how risk, control, and technology quietly shape the world around us. Today, we're exploring a topic that touches every single one of us: the hidden technology controls behind everyday transactions. From grabbing your morning coffee to checking your bank balance or making an online purchase, a network of invisible systems are constantly at work, keeping your data secure, ensuring your payments go through correctly, and making your digital experiences feel effortless and trustworthy. Before we jump into the conversation with our guest, I want to quickly call out three quick points. First, the examples we've discussed today in this podcast are intentionally simple and relatable. This episode is especially useful for people who are new to the world of controls and risks. Second, we recorded this episode before the Digital Personal Data Protection Rules 2025 were notified on November 14, 2025, and hence some aspects that we discussed did not account for the final rules that were notified. And third, all views and opinions shared in this podcast are personal and do not reflect the views of any organization. Now, with that said, let me introduce you to the person who's going to help us peel back the layers of these unseen mechanisms and the risk behind them. Please join me in welcoming T Saravanabhava, a distinguished leader in the audit and risk profession. With over 22 years of experience in leading SOX, control assurance, and third party trust services, he has extensive experience across different sectors such as automotive, retail, manufacturing, and technology. He has also mentored young professionals and equipped many auditors with skills needed for tech-driven future. He is also passionate about training and often contributes to the professionals' publications. So let's dive in, exploring how these systems work, what happens when they don't, and why data privacy and integrity matters now more than ever. Thank you, KTS, for accepting the invite and being part of this podcast. We can get started. So, our first topic is on a coffee shop order. What are some of those hidden controls behind a coffee shop order? So, let's start something, very basics as such. So, when someone taps their card or a phone at a coffee counter, what invisible checks that happens before a payment is even approved or a coffee is delivered to a customer there?
Yeah,
Could you
maybe
actually
we'll take
share
a
some insights there? Yeah.
sure. So, when you decide to buy something at a coffee shop, you just look at the menu, then you decide that this is the coffee or a sandwich that you would like to order, and then
Correct.
you check with them if it is available. So already, there is a simple control that probably should exist at the shop,
Right.
checking whether that product that you ask for, whether it is available or not. Most
Correct.
of the time it will be available. Sometimes it may happen that that product or that ingredient that goes into the product is not available. This is a simple, I would say, inventory type of control that is sitting in the system and then prompting the barista behind the counter whether that product is available or not.
Right.
So let's assume it is available, and then you move forward to uh, order it as well as pay for it. And then you may either use a credit card or an UPI. Currently, that is the flavor of the country. So either of this payment, right? So what happens when you type a credit card? So there is a machine that reads your card, probably asks for a PIN. Sometimes if it is less than 2,000, the PIN is not required. Actually, it is less than 5,000 now. So then the card gets validated, and then they get a confirmation that the payment is approved, and then they generate the bill. Similarly, in UPI, you open your UPI app. Now there is a mandate that you have to enter a PIN. You enter a PIN,
Right.
and then that's get authenticated by the payment service provider. It can be a wallet or it can be just a
Mm-hmm.
UPI provider. And then once that is authenticated, the information is going to your bank and that amount is getting debited. And again, a confirmation flows back to the coffee shop saying that your payment is successful.
Correct.
So that helps the payment survey, the coffee shop to understand that the payment is successful, and then they go ahead with the processing the order.
Right. Okay. So, moving ahead a little bit, why do like you called about credit card details that's been entered or are tapped, or obviously it would be processed through that machine, right? Uh, I know for a fact that there are some regulations which will mandate businesses to only share some information and not all of them. For example, PCIs, right? So why do businesses only share part of the customer transaction data with partners? So obviously that, the coffee shop, like for example, if we take a Starbucks as an example, they would have some other vendors also who would be partnering with them in that whole coffee shop order itself. So when you tap a credit card, according to that mandate, they have to probably be sharing only a part of a customer transaction. Now, what could happen if they don't actually?
So by design, if you look at today, how it happens, Ashwin, is that only the card information that is required to process the payment is getting transmitted.
Right,
Unlike, probably we should discuss about an order that is placed on an online portal or an e-commerce site, but that's
right.
different. But here, because you are just doing a physical transaction, in the sense you want to
Mm-hmm.
just order a coffee, and the coffee shop just wants to know whether you have a valid payment method and that is approved. So the machine, the EDC machine that connects to your card, just
Right.
sends that information back to the service provider and then validates the correctness of your card and then says that it is approved. So only that portion of information is actually transmitted in this case.
Right.
So
Okay.
the coffee shop need not even retain your credit card number. Even if
Mm-hmm.
you look at the charge slip that comes out of the EDC machine when
Mm-hmm.
the payment is approved, it probably will have the last four digits and other digits might be masked.
Correct.
It may not have
Exactly.
your, uh, you know, expiry date of the card or your CVV number. So that's not
Correct.
required. So that's how it works. And actually, it's a good principle. First, it limits the data it collects, and then that data is securely transmitted through the machine
Mm-hmm.
to the
Right.
service provider who authenticates it, the payment gateway which authenticates it.
Makes sense. So basically, a concept of a data minimization would reduce an exposure to that sensitive information like expiry date or a CVV number, and it's encrypted before it's been sent to the end system as such. Or maybe I would even say tokenized, so that you don't get to see the entire 16-digit credit card number to anyone who not supposed to be looking at it apart from the owner of the card itself, right?
Yes.
Okay,
But
can you give any sort of a real-time example that something got failed, in any of these, phases where information was carried out and it had a bigger impact? So our audience could possibly understand about what happens, or what some of those safeguards that what they should be taking care when they walk into a coffee shop for ordering a coffee.
yeah, I mean, the very simple control measure that they will have. See, many coffee shops, especially you took an example, they may provide free Wi-Fi to their customers. Now,
Hmm.
that Wi-Fi will be on a different network segment theoretically, right? That will be a guest
Right.
network or something. But
Correct.
then I'm presuming that the companies would not have the
Hmm.
EDC machine connected to that network. That will
Correct.
be in a secured network,
Correct.
right? So
Exactly.
that
Yes.
nobody even attempts to access that
Correct.
when you are putting in the coffee machine. I'll give you another example that I've practically seen in a case. It's a
Hmm.
real life case. Like it was not at a coffee shop or somewhere, but it happened with a similar setup, but then it happened in an ATM. So
Hmm.
it was a bank's ATM. They were um, connected. The ATM machine was connected to the server, but the
Hmm.
wires were all exposed. So
Okay.
somebody disconnected the wire, plugged their machine, They
Okay.
tried few times to change the password, and then
Okay.
there was no minimum or maximum limit that was set, and then
Okay.
it allowed them do a brute force attack and then compromise the debit card password or the ATM card password. And without
Interesting.
the
Okay.
card being, yes, and
Okay.
then they were able to connect to the machine and then go to the server and then withdraw money, transfer money,
Oh,
because they were able to easily change the
okay.
password. So I mean, again, if you look at that case, probably they should have limited the maximum number of times that you are trying it
Correct.
to
Right.
when you're entering an incorrect password. Second
Right.
is even physical protection. How are the cables even exposed for somebody to just remove it from the switch and then connect it to their device? So these
Right.
are things that have happened in the past, but now the industry is much more matured. There
Mm-hmm.
are controls that are letting people learn from the mistakes, and so it is much more secure, or at least has to be secure. And then,
Exactly.
as an IT audit, when we go that, we all check all these possibilities to see whether there are enough precautions that are being taken to minimize such incidents.
Got it. Okay. No, this makes sense, Kater. So, thanks for giving that, real term example. It sounds scary, but really interesting. Or probably how I could even think of how we, as a customer, when we walk into a coffee shop, are invisibly susceptible to a lot of things, or even when we go into an ATM, because we don't even know when we just walk in and then draw cash and then walk out. We don't know what happens after we walk out there, right? Okay, makes sense. So let's probably slightly shift our gears from a coffee shop to a banking, transactions there, because these are very interconnected. You probably be using a banking information when you actually, as we spoke, using to order a coffee, right? So they say in banking, the trust is a very paramount thing. Now the trust isn't actually given because they have been engineered into the system by design through a lot of invisible controls. Now, with that context, could you walk us through like what actually happens behind the scenes when someone uses their bank account or even like a loan account, because that's more prevalent right now, right? I wanted to understand, like, what are some of those foundational things that happens at the back end when you access your maybe a personal bank account, online or loan account, anything of that sort.
Yeah. Yeah, you mentioned a very good point, right? And I can also see behind you there is a word called trust the process. And
Right,
trust is a very, very important element in when it comes to a financial services industry, because there are millions of customers, ordinary citizens of the country, who deposit their money into the bank accounts,
correct,
and they do it because they think it is safe.
right.
There were days when all the records were maintained in manual ledgers, right? Nobody could
Mm-hmm.
just easily steal the amount, because amount is
Mm.
there in ledgers, which are
Right,
hard copy. Those days, the
correct,
huge ledgers.
right.
And then your state passbook reflected what amount you had. And then the amount
Mm-hmm.
was maintained in cash to that extent that is required at the branch, and the rest were maintained, in their
Right,
headquarters with Reserve Bank and so on. But
correct.
today everything is electronic. Today everything is electronic. All the systems. There is a core banking solution software that
Right, right,
enables all the branches to run seamlessly.
correct.
And it is very important. The fundamental principles of information security, right? And information protection as well, confidentiality, integrity, and availability.
Mm-hmm.
These are addressed. No, the processing integrity. Integrity is very, very important, because people trust the banks or the financial institutions with their money, and they
Mm-hmm.
think, let's say, if it's a savings account or a lot of term deposits are made, like fixed deposits, and they think the bank is, or the bank systems are doing the interest calculation very correctly,
Right,
and
right.
nobody now checks it. I mean, there were days when people used to actually at least do a sense check with their calculator whether the FD
Correct.
interest rate
Exactly.
calculation and the,
Right, right.
but today everything is system driven, and people believe that it is system and it is working fine.
Exactly.
And it's good. It's good because it is system. It is much more better than human, because the
Accurate
errors are minimized.
also. Right.
Yeah, minimized. But then the systems are also operated by humans. So that's where we have to be careful with what kind of risks are there, and then what sort of
Yeah.
controls the banks have.
Can you just point out some two or three, like, biggest risk considerations that banks manage every day? Because I'm sure they would be managing hundreds of them, but at least for a customer standpoint, what are some of those two, three risks that they would definitely take a look at?
See, in a bank, typically there are multiple people involved. There are a lot of touch points. It's not just
Mm-hmm.
the bank and customer, right? So of course, bank has employees, they have vendors. There's a lot
Right,
more vendor ecosystem than it was earlier. There are temporary employees, there are
correct,
IT partners,
right,
there are people who, let's say, do appraisal alone, not necessarily a bank employee, but somebody who's an expert in appraising jewelry. So there are
correct.
multiple parties involved in this, and then it becomes imperative to make sure the data is protected.
Mm-hmm.
Uh, and today, if you open up any newspaper, you see a lot of cases of people getting calls from different numbers, and they think it is a genuine. They get defrauded by saying something like they are from a government
Correct,
authority or from a police and so on, and then
right.
they steal the UPP, or they are making the customers to log in using their system, which they are
Mm-hmm.
already recording, and so on. So the
Mm-hmm.
banks are continuously fighting those kind of frauds to protect the customer interest as well. Already, if you look at, I think most of the banks are moving towards definitely a dual factor authentication, not just OTP. They are also thinking whether we should move towards something like a
Mm-hmm.
mobile app authentication that,
Right,
like
right.
an app authenticator that we use.
Correct,
So
correct,
that's something to protect, at least to authenticate who is actually accessing the account and whether that person is the right person who is accessing the account.
correct, right.
Then comes the whole system of how do you minimize fraud, right? I mean, because there are
Mm-hmm.
multiple people, then you have to build in a lot of what we call in audit terms segregation of duties control. In terms of
Mm-hmm.
not a single person or a single team is able to do things, there is
Mm-hmm.
always a maker in the process.
Right,
Uh, and of course, yeah, there is a lot of people involved. There are a lot of employees involved. You keep hearing in the news about some employees, very small portion of employees misusing that access as well to,
correct,
transfer
right,
some money from the customer's account and so on. So that again is a risk that banks are cognizant of, and they put in controls to see how that can be also
correct.
mitigated.
Makes sense.
Um, the other important point, which we talked about processing integrity, we talked about protecting the account as well, and the other is availability as well. That's a very
Right,
important factor now because
exactly. Right,
like
right,
coffee example that we spoke about, or anything
right.
that you do today, you are doing a digital transaction. And let's say today I'm going to a shop and then I want to make a payment, and I'm either
Mm-hmm.
using an UPI facility, or I'm, let's say, using a debit card facility, or I'm using net banking, whichever
Mm-hmm.
what I'm using. The availability is a very important factor. If I
Right.
want to make the transaction and then suddenly the system or the app is not functioning, or it
Mm-hmm.
is not working the way it should, then that again puts the customer into hardship, and then they lose that confidence.
So let's move to a related topic within the a bank transaction or a trust concept itself. So when these actually fails, what are some of those when I say operational failures, or when availability becomes a challenge to continue for a longer time? Obviously, the banks should have probably a back end controls to make sure that all these for confidentiality, integrity, and availability are not impacted in any way as such. So there should be always some controls over that. Could you possibly help us understand, or audience understand, about what are some of those controls that are in place at the back end to make sure things are in place even when there is a system failure or a downtime?
Yeah. So the first thing is that you build redundant systems, right? I mean, if you want
Correct.
to maintain availability, you don't rely on a single source,
Right.
whether right from a connectivity standpoint or from a
Mm-hmm.
server standpoint, infrastructure. You have redundancy built in. That's the first
Correct.
thing.
Right.
Second, the other important thing is that you are dependent a lot more on vendors in this aspect, because your data
Mm-hmm.
center most likely will be with a data center service partner. Your internet connection is with somebody else. So there are vendor ecosystems that are helping you to support this. And
Mm-hmm.
normally, the companies, when they employ or when they decide to contract with this vendor, they enter into a very detailed service level agreement where they
Mm-hmm.
mention about they also
Got it.
look at what sort of infrastructure and ecosystem the vendor is having. So if something fails, what is their fallback mechanism? Do they have redundant lines? Do they have redundant servers? So these are all, this diligence is applied, and these are all evaluated at the time of contracting with the vendor. Then, of course, it also is very important that you monitor this via what is called as the SLA, service level agreement, periodically. It can be a monthly dashboard
Mm-hmm.
or more frequent weekly dashboard to say what's the uptime, what is the committed service level, what is the latency in terms of speed, and so on. So there are many parameters that banks will devise or any institution will devise to monitor how the vendor partners are performing or committing or
Understood.
matching
Okay.
their to their commitment.
Yes. So let's shift to our case to our last topic for today is on how our data privacy in an e-commerce operates in today's world, because e-commerce is a more happening industry right now with so many e-commerce players within the industry here. So let's probably touch briefly about e-commerce itself. So like I would probably try to understand from a privacy standpoint. More importantly, that from a privacy perspective, we share a lot of data with with e-commerce, like our location, our email IDs, our name, what we order, and everything. Right? I'm more curious to understand that how this travels, and how what are safeguards that what e-commerce companies have put in place to make sure that they are not breaching privacy in any way, at least with the recent development on the DPDPA coming in picture. This is very important for our audience to understand that what can be shared or what need to know when they share some data to e-commerce websites.
Yeah, just to understand this, let's look at a typical transaction cycle. Let us assume
Mm-hmm.
there is a retailer who has a online website, and a customer is placing an order, and they could visit the website. They choose the product that they want. I'm presuming they would have already done a little bit of research before coming there and reading the
Mm-hmm.
reviews and so on. And then they
Right.
select the product. Sometimes when you select a product and then choose your variant or size, the system will say whether stock is available or not. So there is an inbuilt control to at least check the inventory level for that particular product,
Right.
plus a variant like a size or so, size or color, and then it says yes. So let's assume the order, the quantity is available. The customer is placing the order. The moment you place the order, it asks for some basic details like your mobile number, your email,
Correct.
and sometimes they send an OTP to authenticate these two are correct. And
Right.
then they also ask for your shipping address. You
Mm-hmm.
give a PIN code, enter some details, and then they ask how do you want to make payment. You
Right.
select a payment method. Even though cash on delivery is popular in some portals, but mostly today everything is digital. There is
Right.
prepaid. The companies also incentivize to make prepayment instead of cash on delivery.
Correct.
So you will
Right.
see a little bit of rate difference if you are choosing cash on delivery.
Correct.
And let's assume that there's a digital payment that happens. And what happens? You enter, let's say you enter a credit card, then it goes to a payment gateway. So
Right.
there's a payment gateway, and then they collect the whatever credit card or debit card information that you go, and then that goes to your credit card provider is there, plus your credit card issuer bank. All these are connected to the payment gateway. They get it, and
Correct.
then it goes back to merchant bank, because then
Mm-hmm.
if let's say if it is uh, a not immediate real time settlement might happen, but let us
Right.
for a second assume that it is theoretical, and I'm saying that the
Mm-hmm.
payment will again go back to the retailer's bank account as well. So all these parties are involved in this transaction. This is
Right.
at the time of placing the order, and then let's say payment is successful, the order gets placed, you get a mail that the order is there, and then it says what is the possible shipping date. Now the
Mm-hmm.
retailer, if it's a small retailer, they themselves might have a warehouse in one location. They may
Mm-hmm.
pack and ship product, and then it then goes to the shipping partner. It can be a courier vendor or so.
Got
That's
it.
possible. If it is a very large setup and they have different stores across different states, and that can be either internal warehouse or even a third party warehouse. So then that
Mm-hmm.
information is also somebody else before it's reaching the uh, your courier shipping partner.
Right.
So what happens? You enter the payment information. The payment information not necessarily has to be retained by the retailer themselves, because they are using a
Mm-hmm.
payment gateway which is
Correct.
collecting the information, and they are subject to certain regulations and how to collect the data, how to store it if they choose to store it, because now there is the concept of tokenization that a regulator has introduced. So if
Correct.
the customer wishes to store the data, they might store the credit card information.
Mm-hmm. Mm-hmm.
If not, they encrypt it, they send it back and forth and then authenticate it, and then they finally say the payment is successful. So the retailer might have the seller who is selling you might have the information about you, your name, your email, shipping address, and your mobile number. Not necessarily the 16-digit credit card number plus your expiry date or CVV number needs to be stored with the retailer. That's
Mm-hmm.
the first step, right? I mean, that's you talked about privacy principle. I'm saying that
Right.
you limit what you actually collect.
Mm-hmm.
Before that, when you're going into the website itself, and then you might look at a lot of policy in terms of uh, what happens if you don't like the policy. Is there an exchange available, or is there a refund available? So generally there will be
Mm-hmm.
a refund and an exchange policy that is there mentioned in the portal.
Got it.
Ideally, they should also publish what is called the privacy policy. They tell you what sort
Mm.
of data they collect, for what purpose they use, and they get an implicit consent from you that they are going to collect this data for processing this transaction. They have to store your email, they have to store your mobile number, because only then they can get in touch with you. And when you reach out to them, it will be easy for them to look at that number and reference that order and then respond to you. So
Got it.
that policy should state what data they are collecting, what they will retain, how they will securely store and process that information.
Correct.
Right. So
Okay.
you are giving an implicit consent. Sometimes, when many portals you would have seen that we click that I agree after
Yeah, yeah. So you
scroll.
agree, like, all of them. Yeah. No,
I don't know
that
who
makes
reads
sense.
it, but
I
then
know.
there is a consent. There's consent that is given, but then it's
Definitely.
also you give a consent to for processing this. Now,
Right.
what happens after the order? Then the packaging happens, and then shipping happens. The shipping partner should be provided with your name, address, and even the mobile number. Right? Sometimes the mobile number is
Correct.
also printed on Google, so that
Correct.
if something happens, they are able to call you and say that we have a courier to deliver to you. So these many stakeholders or parties are involved, and the data is moving between these many parties. So the ultimately, I come to that concept called accountability, which is one of the principles that will
Correct.
you refer to DPDP. And there is it starts with consent. It starts with then moves to uh, limiting what you need,
Correct.
limiting the data collection to the actual need or purpose. Then
Right.
comes accountability as well. Accountability
Correct.
in terms of you are actually dealing with the retailer. You do not know which payment service provider or gateway provider or courier or shipping partner that they are using.
Mm-hmm.
Ultimately, your trust and contract is with the retailer. So the
Correct.
accountability to make sure their vendor partners are having sufficient controls lies with the retailer.
Right. Exactly.
So then, which
Makes
means for the information that is personal, what is available with them, they have to make sure that they have put in enough controls to secure the data. Even there, like we discussed, the bank card information may not be stored with the retailer, and
right.
the finance team need not know the address of the person as well, right? Just as an example I'm giving, they are just accounting for the transaction. They need not know the customer's address. Not necessarily, it can still be limited to the customer service team, which can have access to looking at what is the customer name, their contact information, and their address. Whereas, a finance team is just accounting for the transaction, and they theoretically do not need access to even see the customer's
Mm-hmm.
address and personal details. So that's the concept of limiting. How do you want to limit it? Then there's a concept of accountability. Accountability rests with the person who's collecting the data. So in the example that we discussed, it will stay with the retailer, irrespective of how many partners or vendors that they use. The
Right.
accountability for collecting, safeguarding the data, the personal data of the person who is ordering will remain with the retailer.
Right.
And DPDP also, you mentioned about DPDP, it also gives the data subject, that is the person who is
Mm-hmm. Mm-hmm.
in this example, the right to of the data and ask to even erase it.
Correct. More of a consent standpoint, right? So you will have to have a
Yes.
give a consent to withdraw or probably use that information for the purpose, whatever.
Yeah. And again, there is an element of from a retailer's point of view. It is a transaction for them. They are
Right.
required under regulations to maintain the data for certain number of years. So they
Mm-hmm.
cannot say that you delete all the purchases I made from you for the last 3 years. Tomorrow, a regulator comes to the retailer and asks, "You have made this sale last year. To whom did you make? What
Correct.
did you sell?" So they have to
Right.
show. There are certain things that the retailer has to retain for a period, that is mandated by law. Now, if that is
Right.
not the case, then it may be, see, let's say it's a company that is providing just a map service, and you
Right.
have logged in using your account and you're using the map.
Mm-hmm.
After a week, you can say that I whatever travel that I did, that you have tracked and then showed me, that you
Got it.
delete.
Right.
That is easier than if you are doing a financial transaction of a buy or
Mm-hmm.
sell. That
Mm-hmm.
again form parts of a transaction for the company as well, and they may have to retain it.
Correct. Right. No, totally makes sense, Kit. Yes, this was a very insightful discussion, I would say. And again, I'm trying to correlate from basically from a risk standpoint, from a control standpoint. Of course, we took three examples like a coffee order or a bank transaction or e-commerce. But foundationally, I could get a sense of the importance of risks to be assessed before putting systems in place or controls in place, or how effectively controls has to be operated and what should be done if controls fail, and to make things sustainable. And again, it takes it to me to a concept of a business continuity or a disaster recovery, and all of these should be in place. And ultimately on a data privacy, with the we getting into a world of digital, in our whatever we were doing it before without digital touch in the past, now we are doing with the digital only in touch. I think it becomes more important that whatever data we are sharing, it becomes a responsibility of the organization collecting our data, plus it is also an awareness for a user or a customer who is sharing that data, what they can share and what are the rights that are available to them when it comes to sharing their own data. So I think it has opened up a lot of thoughts in my mind to go back and check, hey, some of these things that I should probably be looking into it. But when I go into a coffee shop, when I go into a bank account or open a bank account or even share data with e-commerce. So thank you so much today for joining us and then helping us to see the some of these invisible safeguards that quietly actually working at the back end, but we don't get to know us. Now, this was very helpful. But before I close in, I wanted to just open up for your final thoughts here, Katius.
I generally say that in my experience, I always say that focus on risk. Don't focus on
Right.
control. As much as possible, if you focus on risk, then you will get to the right controls. It can be preventive, it can be detective, but focus on risk. And risk assessment is very, very critical to see what are the potential things that can go wrong. And then,
Mm-hmm.
then you decide how much you want to mitigate with your own controls, how much you want to transfer it to a vendor partner and manage the risk that way, or how
Got it.
many you are willing to accept and then live on. Because risk elimination is not possible, risk mitigation is what is possible.
Right.
So,
Makes sense.
I hope this was useful, and thank you so much for having me here, Ashwin. It was a pleasure. Good to talk to you.
Definitely. It's a pleasure to have you, and thank you for coming on the podcast despite your busy schedules. And I know you would be busy quite all most of the days in a week. But thank you for accepting the invite and coming on this podcast. Thank you so much, Katius.
Thank you.